only spend about 30 minutes or so probably just discussing a couple different things that I think are relevant today. I know we all have a lot of free time and are watching a ton of different live streams and other stuff for our classes, so I'm not going to spend too much time with this, but I do want to go over two things particularly. First of which being the price of oil. Recently, I'm sure we've all heard in the news that oil has been doing some pretty interesting moves, doing something that it has never done in the history of, I guess, futures contracts with regards to oil, and will probably never do again. But who knows, right? Who knows what's actually going to happen in the future? So let me find oil right here. What am I looking for? I'm looking for chart. Chart. Let's do. It did not just pull up for me. It's silly. Oh, there we go. That's stupid. Okay, so right here we have a future for sweet crude oil, and we can see it's tracking the S&P currently. That's what that purple line is, but I'm going to get rid of that because it doesn't really matter. Remove all studies. Yes. So we just really want to focus on oil, and now this is a, let's make it a year chart. So this is over the past year. This high of $66.6 here almost exactly a year ago, which is interesting, and we kind of see it go down here to around that $55 level, and it just stayed there for the better part of last year. And it wasn't really until the beginning of this year that we saw prices start to decline. Now, then again, it wasn't until the coronavirus hit, COVID-19, that we really saw this gap down to around the 30s, and then it was yesterday that we saw it fall close to zero. And some versions of oil futures contracts actually fell negative, meaning that companies, well, rather, oil futures contract holders were willing to pay you to take the contract off their hands. Now, this confuses a lot of people. So the way these contracts normally work, the way futures contracts normally work, is in increments of 1,000 units of whatever the future is. So in this case, oil, barrels of oil. So when you say, oh, oil sits $30 a share, or $30, excuse me, a barrel, that means if you're going to buy a futures contract, you're going to buy $30 times 1,000, which is the increment in which futures contracts are sold. And that is the price of your contract. And then from there, it does behave very similarly to a stock, in the sense that, hey, if you're a buyer, you want the price to go up. Why? So you can sell that that contract at a higher price and then capture that difference. Oh, hold on. I have to move my cat. It's in my way. Okay. But recently, you know, it doesn't make sense to a lot of people, and that's where a lot of these questions are coming from. How can an asset like this go negative? That doesn't even make sense. Why in the world then, if oil goes negative, would I not try to buy as many contracts as possible? Because if you buy a contract at, say, negative $10, that means you will buy, well, receive 10 times 1,000, right, for one contract. And then obviously if you buy two contracts, it's 2,000, 3,000, et cetera, et cetera. So that's a bunch of money. Why doesn't everyone just buy all of these contracts? Well, a futures contract is much different from that of a stock in the sense that you actually at some point will have to take physical possession of the asset. Now, the chart that we're looking at right here has a expiration date, if you will, of June 20th, meaning that it is the price of oil to be delivered on or by June 20th. Now, I don't know about the rest of you, but if I were to have purchased an oil contract, an oil future, I don't have anywhere to store 1,000 barrels of crude oil. And this is the same problem that the companies who manufacture it are running into. Crude oil recently and all types of petroleum fuel have undergone an extreme drop in demand. If you look at just the United States alone, with the travel bans and the shelter-in-place orders, etc., people aren't allowed to leave their homes, or at the very least, are doing it much less frequently. We're consuming much less fuel in our cars. Airlines are flying significantly less planes, therefore using less fuel. So the demand for oil has just plummeted. But the production infrastructure, the oil rigs and the workers who produce it, don't stop as quickly as demand stops. So we can't really adjust the production of the supply to the sudden change in demand. So now all of these oil companies are continuing to produce oil, even though they're trying to slow down. It's hard to do that so rapidly. And have run out of places to store it. As simple as that. And it's more expensive to store oil for them than it would be to pay us to take it from them, or anyone to take it from them, which is the logic behind oil prices going negative. So, for instance, let's say if you were to do some accounting, right, on oil, on a barrel of oil, and you discovered that for your company it cost you, let's say $20. Well, no, let's bring it down even. Let's say $10 a barrel to store it, to house it in a warehouse, or some other distribution center, anywhere like that. I'm not exactly sure how oil is stored, if it needs to be maintained somehow. But it costs them $10 a barrel. So now they've accumulated so much, they have filled up their warehouses, and now they need to acquire new space if they want to store more of their production. Now, let's say one of the options is to buy a warehouse and then fix it up to maintain oil. I don't know if it needs climate control or anything like that. Now let's say it costs $40 a barrel to store oil at these new prices. It would make sense then for this oil company, instead of doing that, because demand won't always be this low, it'll eventually go back up, and then these buildings will no longer be needed as people start buying oil again. It makes sense for these oil companies to then sell this oil, if you will, to investors. And when I say sell, I actually mean pay us to take it from them and store it somewhere with our own facilities. Now, it's expected in the near future that some companies who are not necessarily interested in oil will begin figuring out storage solutions to take advantage of this. There's a business in and of itself here. If you can provide storage, they'll pay you to take it off their hands, and you can resell it at a later date, even with significantly less available capital for yourself. So I personally can't take 1,000 barrels of oil, and I'm sure many of you can't. But smaller firms throughout the world, or entrepreneurs with some more capital behind them, might be able to figure something out. And therefore, eventually, probably very soon, we'll see this kind of race for supply of storage. And eventually supply will meet demand, and oil prices will return, maybe not to normal so quickly, but at least return to a level that is less unusual. So, I mean, that's really about it when it comes to what's going on with oil. I know I haven't been doing a lot of stuff with the screen here. I like to pace when I talk. So let me check to see if there are any comments. I'm not even sure if I have any viewers in this current moment. Yeah. So anyway, let us continue, because I'll wind up posting this on YouTube if people are interested. So then that leaves us to the next question regarding oil. What can you do to make money off of this now? That's a tricky question. So there is a lot of room to make money off of oil, but you're also going to be assuming a lot of risk. If you trying to make a lot of money. One of the principal problems is a lot of oil futures that are priced way out into the future are still very much positive, and understand that this is a temporary decline. So the only real way to make money is in the short or intermediate term. Now, what you're betting against, or for rather, is oil prices will go up. That may not happen. People will say, well, look at these levels now. There's just no way that it can continue to go down. It's an easy way to make money, and that's not true. People would believe that there was no way that the price of an oil future contract could go negative, and it did. So you're assuming a lot of risk. You're legally obligated to receive the physical commodity, in this case oil, if you own the contract at expiration. And the only other thing you can do, say for instance, if you quote unquote bought an oil future, one, for negative $10, right? So you get that negative, well, that $10 times 1,000, $10,000, and that is credited to your account or debited to your account. But it continues to fall, and it gets close to expiration, and you don't want to receive 1,000 barrels of oil. So what do? You pay someone maybe negative $15, or well, I say you pay them. The price of your contract might be negative $15, meaning you'll pay them $15 a barrel to take it off your hands. So all in all, being a net loss of $5,000, 50%. So you do assume a lot of risk there, right? Because we can't receive oil. If you, for whatever reason, had storage for 1,000 barrels of oil, you might consider just taking it. Obviously, I'm not familiar with the delivery process of these types of things, so I'm not sure if it just shows up and someone delivers it for you, the company who owns it, or you pay the shipping costs or anything like that. I don't know. But I mean, by all means, if you can store it, I'm sure you can sell it at a later date for an enormous profit. But again, there's not a lot of people that can store that quantity of oil. Surely the weight of it alone is in the tons. However, there are plenty of futures contracts that, if you get lucky, for instance, say it's negative $10 a barrel, they pay you to take it, or even if it's only $2 a barrel, positive $2 a barrel, and you actually have to pay $2,000 for the contract, you still might be able to make significant money if it returns to levels it was a month ago, in the 20s and 30s. But again, it may not do that, and contracts, especially futures contracts, typically are very expensive because of that 1,000-time multiple of the actual price. So according to this chart right here, we see this 13.36. So that would be 13.36 times 1,000 if you wanted to buy this particular oil future right now. I know TD Ameritrade does offer something called E-mini futures. I'm not too familiar with them. I haven't used them. It's something I've been considering, but waiting out, considering all the price fluctuations recently in the market. I don't have a great enough understanding to do that. But from what I think I know is, instead of times 1,000, it's times 100. So instead of being $13,000, it would potentially just be $1,300. So look into E-mini futures if that is something you're interested in as an investor and want to seek some potentially very lucrative returns on oil. That being said, I'm going to move on to the topic we spoke about last time, but before I do, turned off. I was going to say, what's up, Maggie? Hopefully you're doing okay. Everything is so interesting nowadays. So I just wanted to check to see if there are any comments, but if any of y'all have any questions, if anyone's watching it live, currently, please feel free to ask either in the Twitch chat itself or on GroupMe. I'll try to check them every couple minutes. But one thing that I wanted to talk about that I didn't really get an opportunity to talk about last time because of some audio issues was finding financial data on companies that you're trying to perform some sort of fundamental analysis on. This was going to be a topic that we spoke about probably a few weeks ago if we were to have continued to physically go to school in preparation for uh, the Finance Association stock pitch competition when performing your presentations and forming those presentations. Uh, a lot of brokers will have access internally to financial documents. TD Ameritrade has theirs in a specific section. I'm 90% positive Charles Schwab does. E-Trade, all of these large companies have access to financial data, sometimes in a little bit more consolidated forms that you can find through their websites. But by and large, if you want to find financial data straight from the source, sec.gov, Security and Exchange Commission's website here has a bunch of cool information, but we only just care about the financial filings. So we want to look at the 10Ks, right? The annual filings for individual companies. In this instance, so I just went to sec.gov, and I can type it in again just so y'all can see. Gov, yes. It just takes me straight here. And then we have this tab, Filings. And we want to go to this Edgar search, or Edgar. I don't know if I'm pronouncing that either way is right or wrong. Maybe tomato, right? But we're going to go here. And it's going to bring us to this page. So Edgar, search and access. And this first kind of link here, this company or fund name, ticker symbol, all this other cool stuff, we're going to click that because we want to search by the ticker, which is right here. And let's go ahead and look at, let's look at Apple. People always like Apple. It's always used as an example. So we have a few different things here. There's 8Ks, there's a 10Q, which is a quarterly report, more 8Ks, 8K, 8K, 10K. So this 10K right here, which was filed 2019, last year, month 10. One thing you can do is just type in 10K and search, and it just consolidates this list for you right here, so you can see this was the first result was the 10K that they did in 2019, 18, 17, 16, 15, so on and so forth. But we're going to look at the most recent one, so we're going to look at documents here first. This big one first, 10K. Click that. It takes a second to load. So this is Apple's annual report for the majority of 2019 and then the last couple of months of 2018. And here's where you're going to find the breakdown of just a ton of financial data. And it's a little bit daunting. Let's see how many pages this is total, if I can. So I think that's 64. Looks like, yeah, 64 pages of financial data. Now, not all of them are particularly useful, and some of them are very repetitive. But let's say, for instance, I had no idea what Apple does, or at the very least, I don't have a good grasp on everything that they do. There are plenty of companies out there that do things that we know of, but once you look a little bit more into them and you're like, oh, I didn't know they also provided this service or sold this product in addition to what I know that they do. So usually first things first, after the table of contents is you'll find an overview of their business, the company background right here. So it's just defining their products and their services in a simple kind of easy to digest way. So we see the iPhone, the Mac, the iPad, and then the wearables or home and accessories. That's going to be your, not Alexa. Alexa's Amazon, right? Siri, I think they have like Apple TV and AirPods and stuff like that. And then they have their services, which is a lot of that is going to be that cloud services, streaming services that they have now. as well as some more listed down here. It talks about their competition, where their supplies come from, the intellectual property, the research and development, all of these different points right here, which is all good information if you're looking to invest in Apple, if you don't know this information prior to looking into them. Check to see. Okay. And then it will talk about their risk factors. A lot of these are going to be really, I don't want to say generic, but very common. For instance, a lot of the 10Ks I've read always say something like, our business could be in jeopardy if, for whatever reason, our suppliers all explode. Now, it's not that hyperbolic, but the principle is still there. Like this one mentions adverse economic conditions, inflation, a recession, and tariffs. This is true of everyone, and they'll be in almost every 10K you read. But a few of them will be very company specific. I'm not going to spend too much time looking for that right now because I know those of you watching, if you watch this far, probably don't want to see that specifically. So we're going to continue scrolling down and kind of get more into the meat of this 10K. Talks about some, I think these are stock buybacks or something. Maybe just shares purchased. Stock performance, so it's benchmarking itself against the S&P and a couple other indices. Some more financial data right here, very consolidated. Here it talks about the breakdown of their biggest categories, with number one for sure being the iPhone, and then the percentage change year over year, which is kind of cool. You can see that the iPhone in 2019 was 14%, sold 14% less than it did in 2018. If I recall, 2018 was an iPhone release. I'm not sure if 2019 was, so I think that probably would explain that, and we'll see again for the last couple of months of 2019 and moving into 2020. Yeah, see, this statement right here is kind of fun because it's kind of like, duh. iPhone net sales decreased in 2019 compared to 2018 due primarily to lower iPhone unit sales. Well, I guess that makes sense. I guess it could have been potentially price changes or something that could have made that happen. So it just seems kind of straightforward. Increase. So it talks about why these things happened from the company's perspective. And then it talks about their different segments geographically. So we can see the Americas versus Europe, China, Japan is their primary markets, with China being kind of a significant drop there. So interesting to note. So you go through all this data here. It talks about their debt, who they owe money to, a little bit more right here in foreign currency risk, if you want us to read about that, interest rate risk. There's a few, different courses at UH I know that talk about both of these things individually as they relate to companies. And then you start getting into the financial statements, which are pretty straightforward as well. What is this? Yeah, statement of operations, sales. So kind of this income statement right here talks about that. See where their cash is going. Consolidated balance sheets, shareholders' equity. So all that stuff you learn in accounting, cash flows, here's where the cash is going. And then it kind of breaks down where things are going here. I thought that would do something. Oh yeah, I did it, brought that up. Anyway, so ton of data here. This is where I like to pull information from when crafting either an investment thesis for my own portfolio. Do I want to buy or sell this stock? Et cetera, et cetera. I'll just go through 10K for a little bit and read to know a little bit more about the company. I would argue that if nothing else, read some of the texts from management, which was located up front. You can probably find it through the table of contents. Management's discussion, yeah. Read some of this text, look at what they're selling and where they're selling it, and kind of think of what's going on in the economy before making an investment. is iPhone sales going to be way down because manufacturing in China has taken a big hit due to the coronavirus? Is that something that's already priced into the shares? I don't know. What is their share price currently? Let's look. Yes, cat. I wonder if can y'all hear my cat? It's very loud. He's lying here. He's always a good study buddy. Yeah, we kind of see this whipsaw right here with the height of the coronavirus. Kind of panic down here, middle of March, and then this kind of gradual recovery until these last few days. It looks like it's going back down again. So kind of comparing what's going on now with the information that you have available to you last year, you might make an investment thesis of your own if you want to buy or sell Apple. Go through their income statement, see where that money's going. Okay. So, I mean, that's really all I wanted to show everyone, because I get asked frequently, where do you find solid financial data when performing an analysis of a company? And it's always usually my broker, but it's all the same stuff. I always just wind up finding the same form, this 10K. One of the things that's interesting is that I haven't really used that much is the interactive data. That allows you to kind of pick and choose some very specific parts of the 10K if you wanted to look at that. So like if you wanted to okay, I want to find the balance sheets, it kind of makes this even a more consolidated, easier to read little image here that you can look at if that's something you're interested in. Interactive data is cool. I just haven't used it that much because I usually go through, again, the broker that I use, and a lot of the brokers that you all have, if you have them, will provide services like that as well. So I'm going to wait a couple minutes to see if anyone has any questions specifically in the Twitch chat or on GroupMe. And if you do, you just let me know. I'm just going to watch it for a second, but if not, I'm going to go ahead and end it here. I know it's a little bit shorter. But again, I think everyone's kind of sick of listening to live streams from their professors and watching surely just a ton of videos. Just sitting at home, quarantining. So I don't want to make this too long, and I hope the information was good. And if you have any specific questions, if you're watching this after it's been published to YouTube, so after this live stream, feel free to just send me a message on GroupMe, and I'll either address it in the next live stream or address it directly to you, depending on, I guess, when you ask. So hopefully everyone's doing well. It's been an interesting time in our lives. Those of you who are graduating, I'm so sorry. Not that you're graduating necessarily, but because we might hit a major global recession. And at the very least, I don't think you'll be able to walk down stage. I'm not too sure. I just hope it's all resolved. I graduate in about a year and a half. So hopefully everything is fixed by then. Trying to register for classes for the next semester, and that's been a huge pain. I finally got in contact with an advisor yesterday, and that helped out a lot. But everything's full. But we'll see how that goes once the payment deadline comes around. Well, it doesn't look like anyone has any questions, so I'm going to go ahead and end it here. Thank you all so much for watching and listening, and I look forward to seeing you all next week.